Hey, Frank, welcome to Talkin Money. How you doing?
Good. Actually, Fred.
Fred, you know what? I'm looking at a Frank and a Fred. I apologize, Fred. How are you doing?
Good. Good morning.
Good morning. So, Fred is the. Give us your title, Fred, with Camp there.
I'm actually the government affairs chairperson for the California Association of Mortgage Professionals, which is an industry professional trying to promote good habits and to ensure that consumers out there in California are very well respected, presented, and make sure that obviously our members have a code of ethics, and again, we're the advocates on behalf of the consumer.
So in the first hour of the show today, I just had kind of mentioned that you'd be coming on, and I brought up the point that it seems like the politician du jour right now, their goal is to come up with a mortgage bill that they can tout while they're rerunning for election or running for election. They can show how they're helping the consumer. So it seems like everybody and their mother is creating a new bill, a new idea, and a new policy for the mortgage industry, which has already been bombarded and overwhelmed with policies. Would you agree or disagree with that?
No, I completely agree. I mean, unfortunately, everybody right now wants to create the silver bullet. Everybody has their understanding of what the mistakes were made and what their best solutions are. And the unfortunate part is, Jeff, is that when you really look at it, it's almost like a patient goes to a doctor and has all these ailments, and then basically goes to one doctor, goes to a next, and by the time they're done, they see 5 doctors and they prescribe 5 different medications. And guess what? Those doctors never talk to each other. And unfortunately, what ends up happening is that even though each medication was supposed to cure something, it ends up killing the patient because they basically overdose. And that's kind of what we're seeing right now.
Right. Now, and my contention is that right now, if you go back to kind of the start of the national licensing, the NMLS, and some of the changes that have been made, each loan officer, each originator now is responsible for their own work product. They can be tracked, and by doing some of those changes, we've weeded out, not all, but a majority of the bad seeds and the bad companies. And my contention is the stuff that we're creating right now as an industry, at least here in California, is gold. I mean, it is some really good quality stuff that's beneficial to the consumer and beneficial to the investor, and not going to cause the kind of risks we had in the past. Would you follow that or no? Oh, no, absolutely. I mean, the amount of controls, if you will, or rules and regulations that have put upon our industry, I would say that the person that is left here, and I always tell people when I speak to our groups, I always congratulate them because I said, you've been tarred, feathered, set on fire, and you still remain in this business, which basically means is that you really want this as a career. You are a true professional that is helping the individuals today. You're not in this for the fast buck or anything else, but you truly do believe that you're in this for the long haul, that you really do care about the people that you serve, which is again, at the end of the day, that's really what you want as a mortgage professional. If you're a client looking for somebody, you want someone that is in it that does the studying, that is well accounted for, which is basically your professional today. And again, you're absolutely correct. The work product today that in a mortgage loan is so much better than it was years ago, because again, you're dealing with professionals who really, take charge of this transaction and give the consulting. I mean, it's funny, you mentioned about, Bank of America, doing 90 days to turn a loan around. I said, I think that's the true difference between going to a mortgage loan professional who is a mortgage broker, not necessarily with a big financial institution, but seriously, this is their livelihood. This is what they do for a living. And I think, that's what is definitely needed to ensure that everyone here in California is well represented. And I think those are the type of people that they really need to understand as a consumer and even as a mortgage loan originator. When they talk to regulators, when they talk to their elected officials, it's like something. We need people to advocate on our behalf, and I think that's really what the key point that needs to be done is that we're advocates. We ensure that the best interest of the client is had. And I think, I think we always kind of need to reinforce that fact on a daily basis. Yeah, and I think that what the consumer doesn't partition in their own brain is that if you walk in, for the most part, if you walk into a bank, whether it's a credit union or a big bank, that is an individual. And many times the person that you walk into the bank is not the person who's doing your loan. That's a person who's handing it off to a processing center and down the line. But as a rule, these are people that are compensated on a salary or by the hour And so your loan going through and getting completed on time and you being satisfied is not really how they get paid. They get paid for showing up in many cases, not all cases, but in many cases. Whereas a lot of the people on the brokerage or the small banker side, the individual you're dealing with, you generally deal with them the whole way through, and their compensation doesn't come until the loan is closed and you're satisfied. Because you can go all the way to the end, the person doesn't sign. You spend a month working and you're not getting paid. So it does require those of us on this end to make sure that we are doing what we say we're going to do, and we hold the hand and get it done. And whether we're asking more than we used to, and that can be irritating to the client. But our goal is to get you to the finish line, and I'm not sure that's always the case with some of the bigger banks. And I don't know.
I mean, it's like, and I'm sure you have the same type of stories. I mean, I've talked to a number of people who again have similar stories where they've been working with families for over a year or even a couple of years. I mean, I have a couple of clients, believe it or not, that are still in my database that I speak to, once or twice a year over the last probably 4 or 5 years because they're just not ready yet.
Right.
Or, certain things happen. But again, that's why I'm in this industry, because I love helping those individuals and I love helping their families, et cetera. And I think that's one of the greatest parts, that if you really ask, today's mortgage loan originator, not that it works for, the big 5 depositories, but really the mortgage loan originator today, they are in it because they love helping people. And I think that's when you look at it, and I think that's the part that, when you talk to these legislators that want to enforce so many different rules and regulations, at the end of the day, we need to combat and say, hey, we're here to help the consumer, and, please allow the natural progression of what's going on now to happen, because there's right now the real estate market is such fragile ability right now in the state of California, if not the nation. And unfortunately, you do have some California legislators and regulators that want to impose even more rules to combat it because they think that it needs to still be fixed. Well, the problem is that you're going to have unintended consequences. And the worst part about it is that the consumer is going to be at risk, and the consumer, unfortunately, is going to pay the price for all the new rules and regulations. Again, the cows are gone. The door's closed.
Yep. Hey, Fred.
We want to, that's the biggest complaint I think that all of us have, and that's one of the reasons why mortgage loan originators are advocates. They're advocates for the consumer today.
Fred, let's do this. I'm going to put you back on hold for just a minute because we got to take one quick break. If you can hold on. When we come back, I want to talk about a couple items that are specifically related to protecting the consumer and how that's either going to help them or hurt them. And I'm thinking, more about CFPB and some of the other issues. We'll talk about those when we come back. Can you hold on for just a minute?
Absolutely.
Okay, let me put you back on hold. And that's Fred Krager with the CAMP, California Association of Mortgage Professionals. Let's get a quiz question in here at 339-1140. 1-800-920-1140. You can text me the answer at 441140. Go ahead, Johnny.
So we had a blockbuster weekend. Which movie shattered box office records for the opening weekend?
So what's the number? How much did it make?
$200.3 million.
So and that's the number one movie of all time. $200 million is came out and recently. What is the number one movie of all time at $200 million? 339-1140. 1-800-920-1140. You can text me at 441140. This is Talkin Money. My name is Jeff Tarbell. That's John Fodoraro. We'll be right
back.
Be back